Hello traders, Gary Wagner here, approximately 11:45 in Honolulu, 5:45 in New York. It is Wednesday, the 25th day of April 2012, and this is the Daily Report for Gold and Silver.
I'll summarize today's policy action by the Federal Open Market Committee, and then I'll place the committee's policy decision in the context of our economic outlook and our collective judgment regarding the appropriate path of monetary policy. As indicated in the statement released earlier this afternoon, the committee is maintaining the highly accommodative policies that we initiated at previous meetings. We decided to keep the target range for the federal funds rate at 0 to 1/4%, and we continue to anticipate that economic conditions are likely to warrant exceptionally low levels of the federal funds rate at least through late 2014.
That is correct. Directly from the horse's mouth, or in this case, the Fed chairman's mouth, Bernanke has kept alive the belief, the speculation, that the Federal Reserve might in fact continue on a third round, it would be called QE3, of monetary easing. And that would be after they greatly expand their balance sheet to almost $3 trillion with a T, dollars in the central bank itself. Now, in terms of the price of metals today, we do have gold higher and silver lower. Silver, we did get stopped out. We had a low today, I believe, of 29.89, and our stops were below 30.52. Currently, the market is trading roughly between 30.40 and 30.70 on the day. Gold is currently trading up this morning. As you can see, current screen print 1643. In terms of the high and low, the low was 1625.40 and the high was 1646.10. Silver 29.89, low, high 31.06. We'll talk about silver in an extended comment towards the end of the show. This is the S&P 500, as you can see. Sizable breakout. That market was up today along with gold. First market that I want to look at is going to be our gold market, and we're going to look at it through a Heikin Ashi chart. This, of course, is our 770-minute chart. Let me go ahead and blow that up for us, traders, a little bit. We talked about the fact yesterday that there's a couple of things that are absolutely critical. And to me, on a technical basis, the most critical area right now happens to be the support channel. And we'll look at it on a weekly chart in a second. But as you can see on this support channel, and this support channel, here's our resistance line. This is forming our triangle correction itself. We're looking for a series of two more legs. It is our current belief and count that wave 1, 2, and then 3 here. This is probably still a part of 3 or 4, but the fact that it's back here right now makes it a little bit difficult. But I do believe that we are now going to begin our fourth wave or leg up. That's going to be an impulse wave to the upside. If in fact we are fortunate enough to see that market move there, I've forecasted a couple of targets last week, but we'll go ahead and revisit those in the upcoming days once we see if we can get past this critical area, because we're still right on the line. But the fact that it has found support here, it has been trading here, we've kind of weathered the Bernanke storm. In other words, whenever the Fed speaks, you can get such a whipsaw or a knee-jerk reaction. It's one of those hold on to your bootstrap days. Today it was actually fairly quiet as I watched him speak and watched the market move. There wasn't a huge instant reaction to the statements that he made. Traders, the next chart I want to look at and talk about is our weekly chart of cash gold. It has our major count in terms of the Elliott wave count. But traders, I normally blow up just one portion of the chart. It's typically to about here. This is what we're typically looking at. In fact, I believe we looked at it on yesterday's show. And really what's very important to me is this lower support line, because on a weekly chart, as this market's been moving, and realize this is from call it the end of 2008 all the way up to present. But the market, of course, has had oscillation. There's no doubt about that. But it has been for years trading within this channel range here. Then in 2011, when we got our record tops here at 1920, you can see that it broke above this channel line. There's no doubt about that. And in fact, if we fix this point, this high here, with the same angle as this channel line and just extend it, you can see that it pretty accurately gives us the top of this market. But the reason for kind of expanding on this chart today is to show you that I do believe that there is some historical precedence for a corrective wave, then rather than a market coming, say, up to the top and then going A, B, and then C, this long, protracted triangle correction, we have seen it in history before. If we look back to the period of time starting around mid-2006 all the way to about the end of 2007, you can see there was this long, protracted wave 4. That's this wave right here, in the same way that we have a protracted wave 4 here. It was also a correction that could be identified as a triangle correction rather than a classic ABC correction. For example, as you would get here, A, B, and then you've got a final conclusion, and then you start the impulse cycle all over again, going through your series of waves. 1, 2, 3. We're in 4, and then we'll go into our 5th wave like that. So that by looking at this chart and looking at this contraction that we got back a few years ago, we actually do have some historical precedence in terms of having a extended correction, and we'll have to see how this wants to kind of work its way through. But my sense is that as long as we can maintain a price structure above this critical support line, this really, really long-term trend line, there can be no doubt we are still in a bull market. We can also say with absolute certainty we are experiencing a correction or contraction in price during that period. What is most important to take out of that is that following the conclusion of wave 4, whether that's today, it happened already, meaning that when we saw our lows down here, I believe we had 15 and 1520 being the low, 1530. I'll have to check on that. But once we got that low, it did match and still maintain a price structure above this very, very important and critical long-term trend line. Traders, and how about silver? I do want to spend a couple of moments talking about that precious white metal. Some call it baby brother to gold or poor man's gold. But we're at a critical level. We broke through a support level, but now are just kind of teetering above it. And here's what gets me concerned with this market. When we do a simple Fibonacci retracement from the beginning of the rally, which began at the end of last year, silver is trading roughly at $26. We see a price ascent to $37, almost $37.50 from about $26. So you had an $11.50 move. But look at the way this market just kind of meandered down, continually getting lower lows, lower high, lower low, lower high. Here you had a little uptick. You have a equal high, almost a double top, but it breaches. It makes another low below this area right in here. That was support. It meandered for the longest period of time, and then recently has broke down to test this particular support level. What do I think? Well, my sense is this. Obviously, if it holds a support level, that's one thing. We've seen price points below it, but not closes below it. The significance of putting our stop in this area is that if you get a hard break through this market in this area, there is potential. I don't say it's likely, but there's potential for it to just trade right down to the next support level. The next real support level is almost $30, $29 in silver, $28.84, and that's your 76% retracement of this particular move up, this almost $12 move up. In fact, what we're finding is sluggish reaction, and when we saw gold trade higher today, silver came off of its lows, well off of its lows, as you can see, but still remained challenged to be able to close up on the day. My sense is this: my recommendation right now is to sideline in silver as we determine how the market reacts at this area. On a hard break, I might initiate a short sell recommendation. My personal belief is that it will meander in this area, and if we see gold conclude its correction and begin that fifth wave, that impulse wave, we will see silver follow suit. But on any signs of weakness, this market is under tremendous pressure, there's no doubt. And when we see gold go up, we have historically seen silver outperform that. We saw that for some of the activity over the last few months, but it was more than made up on the downside, because when silver went down, as it followed gold, it would be down a greater percentage point in terms of the ratio than on the way up. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.